Alrighty, what's going on, guys? So back here with part 3 of this price action free course and strategy. We're going to continue exactly where we left off in the previous video, which was pretty much right here after this consolidation. This is an example where, we have to avoid it, okay? After this break, price came back way too deep, and then after that it started dropping again. So that's not what you want to see. Okay, I'm showing you the examples that you don't want to see. You want to see a break, a retest. When the price touches right here, immediately you want to see a bearish engulfing candle so you can get in. Okay, if you don't see that, you don't take it. As simple as that, guys. You have to be picky. So in the next example, we see this is a sort of a clean structure. Price has recently broken a little support right here. You see, we have a nice clean break, right? Nice clean pullback. Price is touching the zone. All you have to do in this area is wait for your bearish engulfing. Let's see if we can find it. So price is touching already. So my job is to look for a bearish engulfing, not a bullish engulfing. In this case, this one is a bullish engulfing. I want to see a bearish engulfing. So nothing right here, nothing right here. This candle right there, that bearish candle engulfing this bullish candle, that makes our potential entries. So right here, we could be placing our sell already, okay? Our stop above, just a few pips above, or you want to maybe put it above the zone, as I mentioned, that's going to be up to you. You want to use the Fibonacci to measure where you can target. You can use from the high, from this high to this low, right? I'm going to put it here. So you could be targeting, you have certain areas. You have TP1, TP2, TP3, okay? This particular case, price reached at least this low, which is one of our most important ones. Right there, you should take partial profits, stop some break even if you want, okay? And then maybe continue holding to whatever target you want, okay? At least a 1 to 2, 1 to 3, if you want to keep holding because you're seeing a big zone, something in the past, I don't know, a previous zone that it was very strong, you could target those, okay? But it's important that after the price sweeps this low, you should be doing something. You have to take partial profits and then move stops on break even. Okay? This is a rule, guys. You have to follow that. Now, look at this. Look at this trend. Okay? I know, I get it. That's a nice push. Price has been pushing up. But let's see if we get something here. When the price broke, you see price in this area did break. You have a break right here, right? With one single candle. I like that. That's a nice aggressive candle breakout. Then price is touching the zone and it did push, right? However, it's not giving me the trigger I want. It's not showing me that bullish engulfing. Some will say that, well, this one right there, but it's not. I want to see my bullish engulfing. Uh, after a bearish candle, I want to see my bullish candle, okay, engulfing the previous one. As I mentioned, the pattern is this. You want to see a red candle in this case, and then a green candle next. Okay, so don't overcomplicate things. Don't do other things that I'm not showing you right here. Okay, that's your engulfing. That's the engulfing you want to see. Okay, if you don't get there, you don't enter. Oh, but Eduardo, I showed up here. The actual bullish engulfing, you showed up here. That could be very late already. So watch out. Okay, because if you want to get in here, you want to place your stop below the low or below this low. It's it doesn't make sense at this point. If you want to do it, I mean, fine by me, but it's not part of the plan. You want to enter at the touch. Okay, price did push really nice though after that, but don't recommend that. What happened after that? Look at this. We have one more break, right? We have one more break of a structure. Prices in this area, and let's see if we get actually a bullish engulfing. I'm guessing we had some news right here because price did push very strong. after it came back down to touch it, to retest. Look at this one candle right there, a big spike to the downside, right? Before actually pushing up. So be careful with that. I'm sure you're going to be tempted to get in here and then place the stop loss here. I mean, it's valid too, because if you use your Fibonacci, you're probably going to be using this entire move. So something like that, right? So your target is going to be quite far away. So be careful with that. Don't be fooled if you see a huge move like that, because maybe there was some news. Try to avoid news. I don't like trading when there are news. Okay, that's part of my rule as well. When there are news, I try just to avoid it. Okay. So from there, what do we have? Look at this. We have the break of that structure, right? Price broke the structure to the upside, came back down to retest. But look at what happened. The retest went way too deep. Why went too deep? Well, probably there was an order block right here. That's where price wanted to go to, right? This was a demand. This was the demand zone. After this impulse, price pulled back to the demand zone and then push. Again, this is not what we want, because this is SMC, smart money concept. We're not trading smart money concepts. Okay. So I hope it makes sense, guys. Right here, this type of trend was not the best for what we want to look for. Okay. For what we wanted. So we have to ignore when we have trend like this. Okay. This is probably not a good one. All right. Now, I'm going to give you guys a few more details and tricks that it can probably improve this. I know that, as I mentioned, I'm providing this course because I'm getting a lot of requests after people seeing me trading only SMC, and they are doing, people on YouTube are actually trading something else as well, just regular price action. So, and they're using moving averages. So we're going to introduce now, in this case, if you want to use any type of moving average, you can with this. Okay, I would say uh, some of the most common moving averages would be the 50 SMA, 50 exponential, or 50 simple moving average. Okay, they both could work. Okay, all you have to do is use it as a confluence. If you see prices pushing up, pulling back to your zone, right, to your support, and you see a bullish engulfing candle, and you see that you're above the 50 SMA, then you have more probabilities. You know that you are in an uptrend. Okay, so you have a lot of potential. This trade has a lot of potential now, because you are not going against the trend. You're trying to follow the trend. So you can include a 50 SMA. Sometimes, perhaps, for longer periods, let's say you're swing trading, you can use a 200, or you can combine the 50. Probably the 50 simple moving average will be much tighter, much closer to the trend, and then probably the 200 is going to be very far away, something like that, the 200 moving average. So you can put different colors to the lines. You can put a different color to this moving average. I'm going to put it green, so you will remember that the green moving average is a 200 period moving average. It could be, as I mentioned, it could be the simple moving average or exponential moving average. Doesn't matter. Okay, they do the same. All moving averages, they will pretty much do the same. Oh, the ones that move a little faster than they all do the same, man. It's all the same, depending on as how you're going to use them. So again, it's the same rule. All you have to do is understand where you are standing, where price is standing. So if you know we have a support right here and resistance, price recently broke, you're retesting the zone, and you want to see your bullish engulfing, you got your bullish engulfing candle, good. Check your two moving averages. Where are you? Okay, I'm above the 50, above the 200. Perfect. I'm in this buy not just because of the moving averages. I'm in this buy because I'm getting all my confluences together, especially my price action, right? And now I decided to include two moving averages, okay? Just to get additional confluence, because that's what you should do. Just as an additional confluence, please, if you're a beginner, don't trust 100% of the times on moving averages only, okay? Because I get a lot of students, uh, people coming in, just new beginner traders coming in and showing me the charts with a bunch of lines, with a bunch of indicators, telling me, oh, but the Ichimoku is telling me this, but the RSI is telling me this other thing. So watch out, be careful. You have to be smart. You have to use these indicators in which it makes sense. It has to make sense. Okay, so you can use them. All right, you can totally use these moving averages. I recommend you especially 50 and probably the 200 or 100. It's just, it's a big time frame. I'm going to jump into the charts and I'll give you some examples, right? Um, One very important thing that I want to show you right now and is actually this, guys. This is key. What time? Because I get a lot of people that also asking me, Eduardo, what time is the best time to trade? And that's going to depend on what pair you're trading, what indice you're trading, right? If you're trading, I don't know, maybe an Australian indice, then I would say the best time to trade it is during Asian session or Australian session. You're gonna have the trading in those hours. Okay, and indices like Nasdaq, S&P 500, it's better to trade on New York session because those indices are based on the US. Now, oh, I don't like indices. I like just currency pairs. Okay, then depending on the country you're located as well, of course. Let's say I'm just giving this example. This is Euro GBP, right? So Euro GBP, I would say it would move the best during London session, right? Okay, so you can choose to trade during London session, a particular pair. Okay, now for this example right here, I'm just going to show you what you can do. Okay, you can use actually this indicator called time zone. Okay, so with this indicator, I normally trade New York session because it's the best time for me, and I trade indices only. So it's the best time for me. So I'm just gonna use the same setup right here. Basically, I like trading from 8 a.m. in the morning to around 1 p.m. I just trade the morning session, let's say. Okay. So from 8 a.m. to 1 p.m., what's gonna happen is that the indicator will highlight just the hours that I should be trading. So that means that I have to stick to my plan. And if I'm going to be trading, I need to stay trading only within this box. I have nothing to do here. I have nothing to do here. Nothing to do here. Nothing to do here. Right? No. Here, this is my session. So I should be looking for setups in this area. As simple as that. Okay. So that means, hey, you're being more picky, you're being more selective. So what is happening right here? Let's see. We have New York session just opening, right? New York session is just starting to show the gray zone, right? So what do we see here recently? It looks like we were on a consolidation, right? We were in this big consolidation right there, right? And we recently had a break of a structure right here, right? Some like probably like that. Right, we had a break, price created this support right there, but then pushed up and then broke, right? So if I want to sell, what do I want to see? If I want to sell, I already explained in the previous videos, I would like to see probably price do something like this, test it, and show me a trigger right here, a bearish engulfing candle, so I can go continue selling. Okay, where's price going? Probably it looks like we're bearish. Okay, at least from the previous day. This was on the previous day right here. It looks like we're sort of starting to show momentum to the downside, and price wants to go down. So okay, I can kind of continue bearish. So let's see what price is actually going to do right here. Now, forgot to add. Let's go ahead and add an SMA, right? Let's go ahead and add a simple moving average. Let's go with this one right here, right? So I'm gonna add. Two and three, two and three. Okay. Yeah, let's get it. So the number two is the 50 and number three is the 200. So, okay, I'm using two lines, but let me change the colors because you're going to get confused. So this is going to be, it's going to be blue. Let's put it blue. You can change the colors later, guys. Doesn't matter. This one is going to be all red. Okay, there we go. So the blue is the 200. Okay, so look at where we are. You see how choppy it was. You see that when markets are moving sideways, there's no indicator. Most indicators will fail when market is moving sideways. Okay, if you are trending, it's going to help you. Okay, but in this case, what we're trying to do right now, we're trying to go selling. So let's see if we're actually going to have what we want. We wait for price to do its thing. Okay, looks like it's retesting now the zone. I'm patiently waiting, and look at that. Look at that candle, right? This is what I want you guys to see. As simple as that. If you don't see a bearish engulfing, you don't enter. If you don't see that bearish engulfing showing up as soon as they test the zone, sometimes it's not going to show it right away. Sometimes it's going to struggle, and then we'll show you the engulfing later. Okay, but you have to see, the point of this thing is that you have to see that bearish engulfing. Now, where we are below the 50 and the 200 is above, so we're definitely bearish. Now, okay, let me see if I can go ahead and mark up my projection right here then. So I can go, if I'm entering right there, I'm entering it as soon as that candle closes, placing my stop very tight right there. And then I can go for, let's go for a 1 2 3 in this case. I kind of like the trend is just starting, and I'm in my session. I'm in New York session, so cool. Of course, for sure, I want to take action right here this low. I'd like to take partial profits in there. So let's see what the price is going to do. Boom, hitting right as soon as it hits that, I should be on break even, taking partial profits and probably holding the rest. Oh, got me out of break even. Okay, fine. See why it's important? See why it's important to take action. Okay, take action. What happened after that? Price is reversing. You see, it would have got you out on the trade if you didn't put it on break even. Okay, not all the time the price will go where we want exactly, just barely here. They give us almost a 1 2 3 before reversing and coming back up. Okay, but you see, we were right. We were sort of bearish at that very moment. Okay, now again, I'm using a currency pair, and this example, it would be even the worst example, or the worst timing, because this is Euro GBP and I'm trading it during New York session. It would have made a lot more sense probably to trade it during London. But as I mentioned, that will depend. Okay, so I'm just giving you a weird example right here. So let me try to look for another one. Okay, now look at this particular example right here. We are on Euro USD. I'm on the 1 minute time frame, and New York session is just opening. It's literally just opening. Look at what's happening right here. If you can see the structure, but price was recently created this resistance, right? Price was right here below, then broke it, tested. It was trying to push up, but all of a sudden looks like it's failing right here. So, okay, what is happening? I see the failure. Let's see the next candle. What it's going to do? Okay, looks like it's breaking to the downside. Okay, then maybe you see. Are you seeing any nice bullish engulfing candle here that you would have taken to go buy? No, right? It's not showing you anything to buy right here. There's a little candle, a little bullish candle right there, but that's not engulfing. So price did push up a little bit, but now ends up failing. So it did not give you a buy. Plus, it was still London session. You know, you normally trade New York. This is an example, guys. This is an example as if it was me using this strategy right now, right? On Euro USD on a 1 minute time frame. So, okay, I'm in New York session and just starting to watch the charts. I see price is actually breaking the support. It failed to after the retest, it failed to continue pushing up. It looks like it was pushing up. Price was sort of bullish right here, but now I'm seeing it for the first time breaking the structure to the downside during New York. What should I do from here? Okay, you can do at this point. You can get prepared for sales. Why? Price is failing, right? Is breaking a previous structure. If you want to look for a sale, you would have to wait. At some point, price would have to come into the zone, give you a bearish engulfing, so you can continue selling, right? Otherwise, you don't do anything. Okay. Now, let's see what price is actually doing right here. Price is coming back up, touching, right? Looks like it might actually go up. And now you're seeing that bearish engulfing. You see what's happening right there. You see that little bearish engulfing candle, right? Now, let's understand where we're standing again. This was a resistance, become a support, and now broke again. Now it's potentially a resistance now one more time, right? And it's retesting. So, and it's giving me a bearish engulfing candle. Let's go ahead and open up the moving averages. And this is what I said, that the 200 probably is going to affect you sometimes, right? This is why you can use either the 200 or the 100. Let me explain. Let me explain here. Let me remove the 200 for a moment. When you use the 50 simple moving average normally stays a lot closer to the candles, right? When you use a 100, a 200, a 300, you keep adding more numbers into that. The moving average is going to start like getting further away from the actual body, from the candles, right? It's going to go further away. So that means it's a long term. If you're looking for short term sales, definitely, or like if you're scalping, I'm on a 1 minute time frame. The best moving average is definitely the 50. Okay, because it's for scalping. It's very short. It's in the middle. It's not the 25 or the 20 SMA, the 20 simple moving average. It's even tighter. If I put the 20, I used to trade also with the 20 long time ago. With the 20, it's a lot tighter. Look at that, a lot tighter. So it's not going to, sometimes it's way too tight. It's just not going to give you enough room to breathe, because technically when you're above, you're buying. But when it broke right here, you might have thought that price is probably dropping from there, is bearish now. But no, it was just stationary for a little bit and then continue up, right? So the 20 is, for depending on the strategy, is way too tight. Okay, so 50 I would say is just right there in the sweet spot, the 50. Okay, now when I said you can add the 200, the 200 is for long term. Okay, if you want to maybe hold a position for longer, you want to swing trade, you could probably be using the 200. Okay, so look at what happened here if you added the 200. Look at the issue that we're having. The red line, remember, is the 50, and the blue line is the 200. So technically, you want to go selling because your price action is telling you to sell right now, right? It's breaking the structure. I'm seeing a bearish engulfing, so I kind of want to go selling. But if I open the moving averages, I see what's happening. The 50, I'm all right with the 50. 50 is telling me to sell. We're definitely below the moving average, so we should be selling. But the 200 is right here. I'm actually above the 200. So the 200, when it comes to longer periods for sort of swing trading, is not in the best position right here. It's not telling me to sell the 200 moving average. If I had the 100 moving average, let's see where it goes. The 100, you see it goes a little closer. It starts getting closer to the chart, to the actual candles. So you see the 100 is also telling me to sell, right? So you see what I'm getting. You see where I'm getting. If you don't want to have the 200 or 100, you just want to have the 50, it's fine. Okay, it's more than enough. That's literally all you need. You don't want to fill up with the 20, 50, 200, 300, 600. You don't want to have 600, 4, 5, 6 candles. I'm sorry, 4, 5, 6 moving averages on your chart. Okay, so I'm literally just hiding this indicator. I'm not, and I use it only when I need it. I don't want you to, just leaving this thing all the time on the charts, because it is gonna sometimes it's gonna get you confused. Okay, so just using it when you need it. When do I need it? Right here. I need it at this point. Should I want to? I mean, I want to go selling. Can I use it? Can I actually go for a sell just to get that extra confluence? Yes. I'm below the 50. Okay, short term. I'm not looking to hold. I'm not looking for 600 pips. All I'm looking is either 1 to 2 or 1 to 3. Okay. Now, using the Fibonacci right quick again from the high of the move of this move, right, to the low of this candle. In this case, it's just this move, this candle, just to measure where my target is gonna where my target can be. So I'm gonna go selling as soon as that candle closes. That's the entry. Stop a few pips above. Then take profit. Let's say 1 to 3. I wanted to go for a 1 to 3 right here. That's it. How many confluences I have? I see a clean break of the structure to the downside. Price is retesting. Okay. Um, Remember, we want to see if price is actually touching a previous support or resistance. So price is retesting. That's one confluence. You're getting the bearish engulfing, very important confluence, right? To go selling in this case. So we have two confluences. We are below the 50 simple moving average. Perfect, right? That's a third confluence. You're adding more confluences to your chart, to your direction, to your bias. It's going to make you feel more confident. Okay. What happens after that? Be careful if you're using with your broker. If you have, I mean, this probably would have got us out. If you have maybe your spread is not that good, probably would have got us out right there, because it came back up very strong. This is why sometimes it's not bad. It's actually good to place the stop loss, especially if you're scalping on the 1 minute, to put the stop loss a few pips higher, a few more. It's literally maybe one. This is just literally like 1 or 2 pips higher right there. You could probably go for that 1 to 4 risk to reward anyways. So you wait for price to do its thing. Once you're halfway, remember, once you're halfway down, or price is breaking a previous low, previous zone right there, you go on break even. But you see that price went in our direction, and then after that it just started climbing back up. So this is what you want to catch. You want to catch those real quick move. And you see when it happened during New York session, right, during my hours, right, on Euro USD. It's a pair that normally moves a lot during New York session. So it is a good thing to be trading at this hour. Let's see actually what happens after that. Is it going to break? Let's see if we can catch another opportunity right here, probably to buy. See, price is breaking above now. Let's see if we can get maybe some sort of retest or no. I don't know if you want to call that a retest, but it did push up though. Yeah, well, price came close enough and it give you a bullish engulfing right there. But this, you see what I mean? Depending on the zone, this is why we focus on the zone and not a line, okay? Because we can see that probably this is an entire zone like that, right? So price did give you a bullish engulfing right here after the break. Then little bullish engulfing, probably enter if you wanted to catch a buy. Probably the entry would have been in that bullish engulfing. Stop a few pips below, targeting maybe this highs or even this next highs right there. And you see that you're actually above the 50. You're sort of retesting again that support. So you see you're going with the move. You're actually going and following the right direction. Okay, and this was a short term. This was a short term sale. This was a nice buy. This would have been around a 1 to 6 risk to reward if you wanted to catch it. You wanted to use the fib to measure. So from the low of this move to the high. So yeah, you see at least 1 to 4 what it giving you, right? This is why you have to see. You have somewhere highs. You could be targeting those previous old highs. Most recent highs. You see, you could have gotten during New York session right here within my time, where normally has a lot more volume. You could have gotten into a sell and even a potential buy as well. You know, So I hope it makes sense, guys. And this type of price action right here, as I mentioned, you don't really need the 50 SMA, but if you want to add an extra confluence, you can add it. Okay. But technically, what we're doing here is just trading breakouts. Okay. The breakouts and retest. Technically, that's what we're doing. Okay. So let me see if I can give you more examples. Now, just to show you right here, just to be careful because this is gold. Okay. On 5 minute time frame. Sometimes it can be so aggressive that sometimes you might see something like this. You see, price sort of breaking, and then all of a sudden you see another, you see a trigger right there, that bearish engulfing. This is very aggressive. I would recommend to be cautious with this, especially on gold. Okay, this was a very aggressive move, very aggressive. Um, if you wanted to measure, this would have given you at least a 1 to 2 or almost a 1 to 3 before it reversed back up. We were where we bearish. If we go open the 50 simple moving average, yeah, we were bearish by the time it gave us a sell. But this is very aggressive. This is very aggressive, a very aggressive setup. So be careful. Normally, if price is consolidating, I would wait. I would patiently wait, probably for the retest. Like you see here, price broke and it came back, and it's sort of, we're still below the 50 SMA, but it's not giving me a bearish engulfing candle. You see what happens? It's not giving me anything, and then sort of reacts a little bit, but then pushes back up. It sort of breaks back up again. So it's changing the direction again one more time. It's trying to push up. Now, if you wanted to go probably bind right here, you see where it gave you a bullish engulfing, which is this one right here. Probably this was the buy, stop loss below, and TP probably to the next high. Or let's say you wanted to get in here. As I mentioned, be careful with gold. Gold it's a pair that you need to uh, have a lot of practice. So probably it would have given you at least, yeah, around a 1 to 3. In this bar. You see, you understand what happened. This was very aggressive. This would have been very aggressive. Probably waiting for the retest, and on the retest, did not give you a sell opportunity because it did not show you a bearish engulfing candle. Your just price actually showed it bullish, and then boom, broke to the upside. Retest once, and this retest, I don't see a bullish engulfing candle to enter. Sort of went down a little deeper one more time. Probably be careful right here because probably was going for this order block right here. Again, this is sort of a setup that it doesn't have to do anything with normal retail trading, but this was probably a demand right there where the price was going, and then sort of came back up into the range, into above that support, and then give you a bullish engulfing right there. So this is a more advanced entry type of entry, but you know that you had your confluences, you are on top, at least you're sort of retesting, you're sort of in the middle of a retest. Is retesting probably twice this support, before I give you that bullish engulfing, and at least giving you a 1 to 3 R at least. So I hope it makes sense. Again, this is gold, so it tends to be more aggressive. So be careful. Let me see if I can get you another example. Looking again on gold on 5 minute time frame, this weird structure here, but I kind of want to go a little bit more advanced now with you guys. So yeah, let's hide it for a second. We'll see on gold. The gold was creating a little resistance and support right here. I'm going to put it like that so we can see it. All right. And this was also a support. So, and yeah, let's mark up the structure well here. So a little consolidation. Consolidation broke back up, and then it was breaking another structure to the upside. So you see right here what sort of happened. If you open the moving average, the 50 SMA, you see where price was going and where it's trying to go now. But it's very important, the structure more than the actual moving average, because you can kind of see where it's going. Without the moving average, you see where the price was going. With experience, you will see you won't need the moving average. Believe me, with experience, once you practice this thing, you won't need, because if you already understand where the moving average, the 50 SMA normally goes. I mean, you can kind of see where the line normally goes, and probably is going into an uptrend right here. So we were bearish, switching to bullish. Okay, so not necessarily you're going to need the moving average anymore. At some point, just by paying attention to where the support is, when a support was broken and retest, you see that break, retest, and a engulfing candle right here. You see that engulfing? So probably our buy, as soon as it closes right there, stop loss below a few pips, right? And then probably going for a 1 to 2, or use the fib from this low to the high. So we go at least for 1 to 3, probably aiming close to this high. So something like that. Price went deeper again to retest. This is gold. Gold, sometimes we retest the zone after a break. We'll retest at least twice, at least, sometimes more, but at least it's going to retest. Like you see after the break, like price breaking, retesting twice. So price broke the zone back up, retest, and then before pushing up. So after the break, retest, and then goes. That's how gold is. So this is an example again of probably a more advanced, but it's technically the same. They're actually buying because it makes sense. You're seeing a structure after structure being broken first to the downside, but now it's climbing back up. And you are in New York session. You are in your session. So I'm trading gold. Gold normally moves a lot during New York session. Uh, I'm waiting patiently for price to break a structure again, retest and show me that trigger, and I'm going for at least 1 to 2, 1 to 3. Price kept pushing, yeah, very strong push. I don't care. Whatever it does after that, I don't care. You want to continue following the trend? Well, if you get outside your trading hours, that's it. You should be done by this. Like if your entry is still holding, and your entry got hit after in the afternoon, very late in the afternoon, around 6 p.m. my time. So that's very late. So I hope it makes sense, guys. Let me know what you think. If you have questions regarding this type of entries, very simple, very easy, very straight to the point, and we can continue with with these videos, with these classes. So let me know what you think. I'll see you in the next class.